Street Smarts, actually, for me, was a fantastic book because it showed your style of investing, which is very hands-on. You go to places, you investigate, you get a feel on the ground, which is very different from taking a view on paper or looking at the returns that a particular country is providing. You also live in Asia, and I've been talking a lot on this show about the divergence that we're seeing just in market terms in Asia-Pacific versus the United States. What's going on the ground, and how concerned is Asia right now about tariffs, the relationship with the United States, etc., etc.?
Not just Asia, most of the world. The
Yeah.
U.S. is doing extremely well. Most of the world is not doing very well now for various and sundry reasons.
Yeah.
Asia is doing better economically, but Asia has some, in China they got debt.
Yep.
And it's coming home to roost right now. Various and sundry, Japan's got its own problems of debt coming home to roost right now. So there are various and sundry problems in various places. At the moment, the U.S. is the best place, the best market. Maybe not the best place to be, but the best market.
What about the investment potential, though? Because you look at things, you like beating up things. You look at markets that are down and you go, actually, that's mispriced and I'll get involved. So when you look at the Chinese market, the Hang Seng down 25%, do you look at that and go, yeah, they've got trouble, as you just mentioned, or you say, actually, they've got trouble, but that looks cheap?
I was just in Russia, speaking of beaten down places, and going and seeing it on the ground. I was in the Pacific Far East. I couldn't believe I found the most wonderful investment that everybody hates. I'm not going to tell you the name yet because I'm buying it, but it's there. There are things out there that are beaten down, and my parents told me to buy low and sell high. I'm sure yours did too.
You stick to that mandate, even in countries like Russia that, you know, have challenges.
The more hated, the better, please. Yes, yes, don't buy them. The New York Stock Exchange is making all-time highs. Julia, that does not excite me. Things making all-time lows excite me.
So talk to me about Asia then in particular. I know you like China. What specifically? Because among those that have got beaten up are the Chinese tech firms, and this is something that we speak about all the time. What do you think of technology as a sector if you're looking at the Asia markets in particular?
Well, Julia, those stocks are not the kind of thing I buy because I don't know enough about technology. But Chinese technology skyrocketed. Now they're having a reaction. They should have a reaction.
Yeah.
Even American technology is starting to have a reaction. They got very, very overpriced. I wouldn't buy them. I would never buy them, but I certainly wouldn't buy them now, even in the reactions.
You always say this. You say, look, I don't know enough about that to invest. And I think that's the underlying core of the investment advice that you give to people is stick with what you know. How do you get diversification as an investor, as an individual investor, if you have to stick to what you know, particularly geographically?
Julia, diversification is something stockbrokers invented so they don't get sued. If you want to get rich, you don't diversify. You put all your eggs in one basket. You watch the basket very carefully. You got to make sure it's the right basket or you go bankrupt. But that's how you get rich. Henry Ford never diversified. Bill Gates never diversified. Well, he does now. But these guys didn't diversify. They knew what they wanted, they put their money there, and they were very successful. That's how you get rich.
Henry Ford, though, is in a different era, and obviously that in particular, autos has been disrupted. But every market's being disrupted, so bring it to the 21st century. So what's a place where you could invest, actually, and not worry about that kind of thing?
Then you find the disruptors. And Henry Ford was a disruptor.
Yeah, he was.
Many people hated him because of what he was doing. He ruined a lot of people, but he made a lot of other people rich. That's what you do. You find the things that are right, that you know about. Don't listen to me. You listen to what you know, and then invest. So and that's how you are going to get rich.
Invest in Chinese tech, invest in US tech, as long as you understand the story. I mean, that's what you're bringing it back to. And you mentioned Warren Buffett there. Same thing. You've got to understand the story in order to invest.
That's the only way you make money. You don't listen to me, or you don't even listen to CNN. Believe it or not.
Listen to CNN a little bit.
Okay, you can listen to CNN. Yes, yes,
Thank you.
Listen to CNN.
For that.
Listen to Julia, but not to me.
Talk to me about the bear market case that you mentioned. And I know you've been quoted widely. You've also said, look, we've seen pullbacks in risk every 4 to 8 years. We've extended that time horizon for various reasons, stimulus from central banks being one of them. Where do you think the risk spot is when you look around the world? Again, I pinpoint the fact that
Washington, D.C.
Really?
Washington, D.C. is the greatest risk of all. The central bank has no clue what it's doing, and the others are following it. The government has no clue what it's doing. Trade wars, you think trade wars are good for anybody? History shows they're not. So Washington is the big risk right now.
It's interesting that I saw a quote from Mike Melkin over at a Nation Summit, and he said the proportion of people in extreme poverty in China over the last 20 years has gone from 70% to just 1%. You said that a lot of the policy conflicts and the risks are coming from DC, but do you agree that the president's right to tackle some of the trade imbalances, even if the way he's doing it is wrong?
Well, trade wars have never worked for anybody. They've always led to problems for everybody. So it doesn't matter if he's right or wrong. If he's going to ruin us all, you know, yes, maybe we have problems. But the problems are not because the Asians are evil. We have a horrible education system. We have a horrible litigation system. We have, you know, we spend more on medicine than anybody in the world by several factors. Our life expectancy is not even the top 25. We have more basic problems than a bunch of evil Asians.
Other policy elements need tackling.
Yes.
I think plenty of people would agree with you on that point. If this trade war continues, the rhetoric, the tariffs continue, where does it end? Does it end up pulling U.S. equity prices down? As we've said, this is kind of the safe haven right now.
Julia, U.S. stocks are at a 10-year high.
Yeah.
We have no bear market, the longest bull market in the history of the world. Maybe it's going to go 20 years. Who knows? I don't know. I'm not smart enough. But I know when it ends, it's going to end very, very badly. You said, yeah, what I said was, when we have a bear market, it's going to be worse than my lifetime. And we will have bear markets again.
Yeah.
The Federal Reserve says, no, 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 we're not ever going to have a bear market again.
Do you think they'll buy more assets
They will
again
do
in the
everything
future?
they can. When things start going down, they're going to lower interest rates again. They're going to buy everything they can, or they're going to ruin us all.
Do you think they end up like Japan and actually buying more than just sovereign bonds? They buy other assets.
The market's going to rally when they do it, but then the market is going to say, we don't care anymore. We don't want your garbage. We know better. Look at Japan. It didn't work, and it's not going to work here.